The biggest cryptocurrency exchange in the world, Binance, was going to save FTX. Then, it backed out of the arrangement. Watch this video to find out more. All information in this video is meant for educational and entertainment purposes only. Before relying on this information, think about your situation and seek professional advice. Before making any decision, you should double-check the nature of any product or service, including its legal status and relevant regulatory requirements, and consult the relevant regulators' websites. When the cryptocurrency market crashed by $2 trillion in May, the crypto company FTX provided financial support to several falling businesses. Sam Bankman-Fried got many accolades as he quickly became known as the CEO of cryptocurrency exchange FTX. The savior of cryptocurrencies, the freshest face in democratic politics, and perhaps the first trillionaire in history. After FTX filed for bankruptcy protection on Friday, November 11th, leaving his customers and investors feeling misled, and many others in the cryptocurrency world fearing the consequences, sentiments about the 30-year-old Bankman-Fried range now from perplexed to hateful. Charges against Bankman-Fried personally may be civil or criminal. FTX swiftly evolved to become the third largest exchange by volume under Bankman-Fried. The shocking fall of this nascent enterprise has caused waves comparable to a tsunami to sweep through the cryptocurrency market, which has experienced its fair share of instability and turmoil this year, including a significant dip in the price of Bitcoin and other digital assets. Some people have compared the current situation to the Wall Street corporation's domino-like collapses during the 2008 financial crisis, especially in light of the failure of FTX and other ostensibly healthy companies. However, FTX required assistance last week, and rival Binance appeared to be close to providing it. Then, Binance made a U-turn and announced it was abandoning plans to buy the business. Hello guys, welcome to another exciting video. Today we'll be talking about the famous FTX crash and everything you need to know about it. But before we continue, kindly like this video, subscribe to the channel, and hit the bell icon to stay notified of more interesting videos like this one. With that done, let's get right into the video. Before we get started, let's clear the air on what FTX and Binance are. So, what are FTX and Binance? As cryptocurrency exchanges, FTX and Binance let users swap one digital currency for another, as well as for fiat currency. According to CoinMarketCap, a company that tracks industry data, the two exchanges handle most of the global trades in cryptocurrencies. Sam Bankman-Fried runs FTX, one of the world's largest exchanges, which is headquartered in the Bahamas. It has spent millions of dollars pushing US lawmakers to institute crypto-friendly legislation. Binance, the largest exchange, is run by billionaire Changpeng Zhao. The corporation, which has no recognized headquarters and operates primarily outside of the United States, has been investigated for violating regulatory rules. Binance was an early FTX investor. Both firms have been built on risky trading options that are not authorized in the United States. Binance.US and FTX.US are small American arms that are separate from their sister firms and are geared to comply with US rules. The cryptocurrency business is increasingly being investigated by regulators on Capitol Hill and around the world. Mr. Zhao and Mr. Bankman-Fried have publicly disagreed on how to regulate cryptocurrencies or whether they should be regulated at all. Why FTX ran into trouble? The native cryptocurrency token of FTX is called FTT, and it is used by traders to carry out tasks, including paying transaction fees. Mr. Zhao sold his shares in FTX back to Mr. Bankman-Fried last year, and part of the purchase price was made using FTT tokens. On November 2nd, the cryptocurrency publication CoinDesk reported on a leaked document that seemed to indicate that Mr. Bankman-Fried's company, Alameda Research, possessed an unusually high number of FTT tokens. Although FTX and Alameda are supposed to be independent companies, the research implies that they were closely related financially. On November 6, Binance declared that it would sell its FTT tokens in light of recent disclosures. As a result, traders quickly sold FTX out of worry that it would be yet another failing cryptocurrency company, which caused FTT's price to crash. Withdrawal requests totaling an estimated $6 billion over 3 days were handled quickly by FTX. It appeared to be experiencing a liquidity crisis, which meant that it lacked the resources to meet demands. How did Binance get involved with FTX? Binance announced on Tuesday that an agreement had been struck to save FTX by acquiring the company. However, Mr. Zhao noted in the statement that Binance retains the option to terminate the arrangement at any time. In a separate statement, Mr. Bankman-Fried said that the agreement would safeguard consumers and permit FTX to complete processing their withdrawals. He stated, "We are in the finest of hands," in an effort to dismiss allegations of conflicts between FTX and Binance. What caused Binance and FTX's deal to fall through? Binance said on Wednesday that it will no longer purchase FTX, claiming that its decision was the product of business due diligence. Additionally, reports of misused funds and regulatory investments were mentioned. Retail consumers would suffer every time a major player in the industry fails, according to a statement from Binance. Binance also stated that, "We've noted over the past several years that the cryptocurrency ecosystem is strengthening, and we think the free market will eventually weed out outliners who abuse user funds." FTX stated on Thursday that it has secured an agreement with Tron, a blockchain platform, to swap some of the tokens into other cryptocurrency wallets. So, why is the cryptocurrency market being impacted by the FTX situation? The cryptocurrency market has long failed to win over investors, regulators, and regular consumers with its reliability. The market has been shaken by the collapse of FTX, which appeared to be more stable than other companies. Since Tuesday, the price of FTT has decreased by nearly 80%. Some of the most valuable tokens, including Bitcoin and Ether, have had their prices swing greatly since Tuesday, at one point falling by more than 20%. So what does this mean for the future of cryptocurrencies? Bitcoin's price has fallen from $69,000 in 2021 to $20,000 this year, and is now at $16,000. Reflecting the collapse in cryptocurrency prices this year and pressure on the mainstream market brought on by the global financial crisis. Companies like Celsius and Three Arrows Capital have folded. However, when asked about the turbulence of the cryptocurrency market last week, Changpeng Zhao informed Web Summit attendees that everything is volatile, even the most profitable tech stocks. However, it depends on your point of view. He continued by adding that if you take a 5 to 10 year time frame, cryptocurrency is the highest performing asset. Within days, FTX's valuation dropped from $32 billion to bankruptcy. It's bad for the company exchange as well as the entire cryptocurrency market, because FTX has become one of the most recognizable companies in the industry. Since the FTX started to plummet, the cryptocurrency market has been in the negative, with Bitcoin trading at $16,900 and Ether at about $1,200, along with FTT, FTX's native token, which has dropped 90% in the last week and is currently trading at $2.60. Sam Bankman-Fried, the disgraced CEO of FTX, formally resigned after his empire collapsed in a matter of hours. His former crypto exchange has had a turbulent week, after its recent filing for bankruptcy protection in the US, wiping off a $32 billion valuation in a couple of days. After Binance backed out from the deal of offering a bailout to FTX, clients began to question if they'll receive any of their money back. FTX has far more than 100,000 creditors, according to bankruptcy documents, with assets worth between $10 billion and $50 billion. Formerly nicknamed the Robin Hood of crypto, Bankman-Fried used his own money to support political issues and even bail out lesser exchanges. The term effective altruism, which refers to the practice of using data to determine how to maximize benefits for the greatest number of people, quickly came to be associated with the CEO. In Bankman's situation, Fried claimed the goal was to accumulate enormous fortune in order to maximize the beneficial influence he could have on other people. Before his spectacular fall from grace, his donations actually remained modest, especially when compared to the significant promises he made. Bankman-Fried initially stated that he would contribute up to $1 billion to the upcoming US presidential election, but eventually changed his mind and contributed much less. The situation is substantially different now that his net worth has decreased. Meanwhile, earlier last week, the entire staff of the FTX's philanthropic unit, known as the FTX Future Fund, resigned after signing a letter that says, "We are currently unable to carry out our work or process grants, and we have fundamental doubts regarding the legitimacy and integrity of the commercial operations that were funding the FTX Foundation and the Future Fund." All this led to Sam Bankman-Fried admitting that he messed up and should have done better. The sudden failure of FTX shows the significance of understanding the risks one faces when depositing money with a company with poor regulations. This is why it's always important to conduct thorough research before making any kind of investment. And that's it for today. So, what do you think about this video? Kindly let me know what you think about this video in the comments section below. Don't forget to like and subscribe to this video. Also, hit the bell to receive more updates. See you next time, and thanks for watching.